Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you still thinking about all the time?
Good morning and welcome to Modern Investing Techniques, episode 40. I'm Patrick in Vancouver. Today is May 12th, 2026. Let's look at what the markets are telling us today and find some opportunities. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Surging oil prices from Iran war tensions could raise costs across shipping and energy holdings in Canadian portfolios, forcing a fresh look at exposure before any further escalation. Markets showed modest gains today, with the S&P 500 closing at 7,413, up 0.2%. The NASDAQ Composite finished at 26,274, up 0.1%, while the TSX Composite reached 34,139, also up 0.2%. Global shares mostly fell as optimism from Wall Street's recent rally collided with surging oil prices and Iran war worries. Investors are watching whether Trump and Xi keep trade tensions low to protect AI sector momentum and potential chip export relief. About 18 days ago, we picked tech on sector rotation into mining. The position closed down 2.94%, underscoring that commodity supply stories need volume confirmation to hold. Sector rotation into domestic growth areas can deliver alpha when policy barriers lift, but only if you screen for concrete GDP tailwinds rather than vague optimism. Today's report on Canadian wineries shows billions in potential added GDP if interprovincial trade barriers and regulatory hurdles are cleared, creating a targeted opportunity in consumer staples and agriculture-linked names. Implement this by screening TSX-listed winery or beverage distributors for revenue growth above 10% and checking their exposure to domestic sales versus exports, using free tools like the TMX website or Wealth Simple Screener. The strategy has historically worked best during periods of federal or provincial policy shifts that reduce friction for small producers, such as past changes to liquor distribution rules. Risks include slow legislative progress and sensitivity to broader consumer spending slowdowns. Focus on names with strong free cash flow to weather any delays. This is a simulated trade for educational purposes only. No real money is involved. This is not financial advice. Our weekly hold for this week is on holding AG on the NASDAQ in the consumer sector. The strategy is an earnings beat entry after strong China sales growth and top-line outperformance versus Nike. The hold runs from Monday through Friday. The catalyst comes from Q1 results that showed double-digit growth in China and a beat on both revenue and earnings lines, highlighting resilience in a key growth market. The technical setup shows the stock pulled back from recent highs. Watch for support near the 50-day moving average, with volume needing to exceed the 20-day average on any rebound. Risk assessment points to broader consumer discretionary weakness or renewed China slowdown that could pressure the name. We set a stop loss 8% below entry to cap downside. The target is plus 3% to plus 6% over the 5-day hold if momentum carries through. Confidence level is medium because the earnings beat and China growth provide two aligned factors, yet sector headwinds add uncertainty. This setup demonstrates how to evaluate an earnings reaction for follow-through potential rather than chasing the initial pop. using volume and support levels to time entry. Listeners learn to size positions conservatively when consumer data is mixed. Last weekly hold was AMD as a momentum play on data center growth and AI infrastructure demand after earnings beat. We entered at $360.31 on Monday's open and exited at $408.46 on Friday's close. The result was a gain of 13.36% or $133.63 on a $1,000 position. The trade gained 13.36% while the broader index advanced modestly over the same window, delivering clear positive alpha in a tech-led week. The data center demand catalyst delivered exactly as modeled, and volume stayed elevated, confirming the setup. The lesson learned is that we should always require volume confirmation above the 20-day average before entering momentum trades on earnings beats. Yahoo Finance Advanced Screener lets you filter for stocks with quarter-over-quarter revenue growth above 15% and RSI between 40 and 55 to surface post-earnings setups like the one seen today. The edge comes from combining fundamental growth thresholds with technical filters, so you avoid chasing already extended names. Canadian investors can run the same screen on TSX names and export results directly into a portfolio tracker. Interactive Brokers TWS API pulls real-time volume and order flow data on commodity names to confirm whether news-driven moves have institutional backing before adding exposure. The platform offers free API access for retail accounts and lets you automate alerts when volume exceeds the 20-day average. Oil prices extend gains as Trump comments diminish hopes for a US-Iran peace deal. Brent and WTI climbed again after comments that the ceasefire is on life support, raising input costs for shippers and energy users. The action is to trim any energy ETF positions above 5% of portfolio if oil closes above $85 this week. LVMH gains a bull as Barclays says sell-off creates chance to buy. Barclays upgraded the luxury name after its worst start to a year on record, citing attractive valuation. The action is to add LVMH to a luxury goods watch list and consider a starter position only if it holds above its 200-day moving average. Canada eyes free trade pacts with Philippines and ASEAN this year. Ottawa aims to finalize deals that would expand non-US trade routes for Canadian exporters. The action is to hold existing international equity ETFs but add a small ASEAN-focused ETF allocation only after any formal signing announcement. Pet Value reports first quarter 2026 results. System-wide sales rose 3% with updated 2026 guidance, showing steady consumer demand for pet products. The action is to place Pet Value on a Canadian consumer staples watch list for potential TFSA addition if it pulls back to its 50-day average. Portfolio performance shows 15 total trades with a win rate of 47%, 7 wins, 7 losses, and 1 break-even. Cumulative P&L stands at plus $0.01. Average return per trade is 0.00%, with the best trade at plus 13.3% and the worst at minus 7.49%. Our AI analysis is learning from the volume confirmation pattern and adjusting position sizing on momentum setups accordingly. Imagine you bought an ETF tracking Canadian banks last fall and it is now down 12% in your TFSA. You sell to lock in the loss for tax purposes, but the superficial loss rule means you cannot repurchase the identical ETF for 30 days or the loss is denied. The mechanism works like this. The 30-day window applies to the same security or one the CRA considers identical, So switching to a similar but not identical broad market ETF, for example, moving from XIU to XIC, lets you keep market exposure while claiming the capital loss. A pro tip most retail investors miss is that losses can be carried forward indefinitely and offset future gains. And the new 50% capital gains inclusion rate makes harvesting even more valuable because every dollar of loss now shelters more taxable income. The T5008 slip your broker issues will report the proceeds, so track your adjusted cost base carefully in a spreadsheet to avoid double counting. The biggest mistake with tax loss harvesting is selling and immediately buying back the exact same ticker. Instead, always map to a close substitute and set a calendar reminder for the 31st day to decide whether to switch back. Before we wrap, open your brokerage app tomorrow morning and check the distance of any Canadian equity ETF to its 200-day moving average to decide on a possible 5% trim. That's modern investing techniques for today. If you found this useful, share it with a fellow investor and subscribe wherever you listen. Check the resources page for tools and platforms we discussed. We're back tomorrow. Keep learning, keep investing. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.